Hey everyone, welcome back to Corporate Dakota. Today we're diving into a document from Gulf Island Fabrication, and let me tell you, it's a bit like trying to assemble IKEA furniture without the instructions confusing, but hopefully we'll figure it out together. It's their proxy statement, which might sound boring, but it gives us a peek into how they're running the company, who's in charge, and how much they're getting paid. Think of it as the company's report card with some interesting details tucked inside. First off, this is a definitive proxy statement, meaning it's the final version. Gulf Island wants you, the shareholder, to vote on some key items at their annual meeting in May. So what's on the agenda for this annual meeting? Well, there are a few important things. They're going to elect directors, which is like choosing the team captains. They're also having a vote on how much the top executives get paid. It's like checking if the team captains are getting fair bonuses. And finally, they need to give a thumbs up to their accounting firm, making sure the books are in order. The board of directors is urging you to vote for all their recommendations. Now, let's look at those director nominees. We see some familiar faces like Richard Howe, the Chief Executive Officer of Gulf Island, along with others from different backgrounds. There's Robert Averick, a portfolio manager, and Michael Keefe, a retired audit partner, among others. The company brags that 4 of the 5 directors are independent. This is corporate governance speak for saying they aren't directly employed by the company or have any apparent conflict. Each director is also on 1 or more board committees like the audit, compensation, and nominating committees. It seems Gulf Island has been working on freshening up their board lately. Since 2018, they've brought in 4 new directors, including a woman and a racially diverse member, while reducing the total number of directors. They're also planning to further reduce the size of the board after the annual meeting. This is corporate code for modernizing the team with new blood, while also shrinking it. The company is open to hearing from its shareholders. You can send a letter, call the CEO, or even email him directly if you have any questions. They said that during 2024, discussions with shareholders focused on things like the market outlook, labor issues, and company strategy. Gulf Island highlights its commitment to good corporate governance. They're doing things like electing directors every year, having mostly independent directors, and not having a shareholder rights plan, also known as a poison pill. What has Gulf Island been up to strategically? They are focusing on things like expanding their skilled workforce, going after new markets, and improving how they handle projects. They are also managing their money well and considering giving some back to shareholders. Gulf Island is bragging that they have annual director elections, a majority independent board, and committees that are 100% independent. They want you to know they are serious about this stuff. The company has codes of ethics for its top dogs and a general code of conduct for everyone else. These are available on their website. The company requires its directors and executives to own a certain amount of stock. The big boss needs to hold stock worth 2 times their salary, and other execs need to hold stock worth 1.25 times their salary. The directors themselves need to hold at least 15,000 shares. Now let's talk money. Non-employee directors get paid in both cash and stock. Looking at the table, we can see how much each director made in 2024. Double the Chair got almost $141,000, while the others made around $100,000 to $118,000. Gulf Island has a new cash incentive program for its executives, and it's all based on performance. If the company hits its financial and safety goals, the executives get paid more. Also, all of their long-term incentive awards are based on performance, so they have to actually do well to get rewarded. There haven't been any raises on salaries since 2022. Here is a quick look at the summary compensation table to know how much each of the named executive officers made. Ken Ho made almost $2 million, Stockton made $1.1 million, and Morvant made almost $450,000. We see the definition for adjusted cash flow, which is basically their earnings with a few tweaks. Here's the breakdown. Had brought in a whopping $115 million. Stockton pocketed $600,000 and Morvant got around $161,000. Here's a quick look at the equity stock awards that are not yet vested. Hale has around $488,000 worth of shares to vest, and Stockton has almost $250,000 worth. There is a vote on whether the company's executive officers are paid fairly or not. The board thinks the pay is justified and are asking you to vote in favor of it. Finally, they're asking you to approve their choice of accounting firm Ernst & Young. The board also recommends that you vote for. Speaking of Ernst & Young, let's take a quick peek at the accounting fees. The audit fees in 2024 were almost $630,000 the year prior. Let's take a look at who owns the most stock. First, Wilshire owns around 6%. Pitt & Capital Partners owns over 11%. Wax Asset Management owns around 13%. The directors and executive officers as a group own 20% of the stock. Let's talk about how the company is doing as a whole. Net income for the company was $14.7 million in 2024, compared to a net loss of $24.4 million in 2023. Good job. The audit committee is the group that is responsible for going over the finances. XT now, based on all these numbers and details, here's my take on Gulf Island Fabrication. They seem to be headed in the right direction with improved financial results and a focus on growing and diversifying. The company looks like it's committed to good governance. However, they have been making some changes with the board of directors. The risks are always there, which could hurt their progress. Overall, Gulf Island Fabrication looks like it is trying to do things right, but time will tell if they can deliver. Thanks for watching. If you found this breakdown helpful, please give us a like, comment, and subscribe for more corporate deep dives. Until next time.